Hey there, and welcome. Have you ever wondered what really separates the top 1% of traders from, well, everyone else? Today, we're going to break down the blueprint from a modern classic, Mark Minervini's Trade Like a Stock Market Wizard. We are going to distill his entire strategy for super performance into a clear, actionable plan. Let's dive right in. So, let's kick things off with the big, uncomfortable question, right? Why do so many traders fail? Countless people jump into the markets full of hope, only to end up losing their hard-earned money. And the answer, as you're about to see, isn't some super secret market formula. Nope. It's actually a lot closer to home. And right here, this really gets to the heart of the matter. It all boils down to two totally different games. On one side, you've got gambling. That's all emotion, gut feelings, and just hoping you're right. Then, on the other side, you have professional trading. That's built on a system, strict rules, and playing the probabilities. And this is the trap, right? Most people fail because they're gambling, but they've convinced themselves they're trading. So that brings us to the biggest trap in all of trading. And it's not a bad stock pick or some faulty indicator. The real trap is our own mind. Minervini's whole point is that before you can even think about mastering the market, you have to conquer the battlefield that's raging between your own ears. Because when it comes down to it, in this game, psychology is everything. And get this, top traders like Minervini put a massive weight on this. They argue that a whopping 80% of your success comes down to your psychological approach. Only 20% is the actual strategy, the X's and O's. Just let that sink in for a second. The charts, the news, the indicators, that's only 20% of the battle. The real war is in your head. So what are these mental hurdles we're up against? Well, they're things we all feel. You know that knot in your stomach? That's fear, and it makes you sell a great stock just because it dips a little. Then there's greed, which whispers in your ear to hold on to a winner way too long, hoping for just a little more, only to watch it all vanish. You've got confirmation bias, which makes you ignore all the warning signs, and loss aversion, where the pain of a tiny loss feels so awful that you hold on and you turn it into a massive, account-crippling disaster. In this quote from Minervini himself, man, it just hits the nail on the head. Learning to control your emotions and trade like a professional is uncomfortable. It forces you to look at your own flaws square in the face. But his point is crystal clear. All the real growth, all the success is waiting for you on the other side of that discomfort. Okay, so that brings us to the very first pillar of the Wizard's Blueprint, the mindset. What we're talking about here is a total transformation. The goal is to go from being an emotional reactor, getting thrown around by every little market move, to becoming a disciplined professional who just executes their plan. Plain and simple. And here's a huge mindset shift you have to make. See, winning in trading isn't about being right all the time. It's not about trying to avoid losses. That's a fantasy. It's impossible. The real goal, what the pros focus on, is just accepting that losses are a cost of doing business. Your job is simply to make sure that your wins are bigger and more frequent than your losses over the long haul. All right, so once you start getting your mind right, you need a plan. And that's the second pillar, the framework. This is where we stop guessing and start building an actual system, a concrete, repeatable plan for how you find, enter, and get out of your trades. So a really solid framework uses two different lenses. First, you have fundamental analysis. This is your what. What company should I even be looking at? Is it financially healthy? Is it growing? Then you have technical analysis. This is your when. It helps you time your entry perfectly by looking at price action and patterns. A real wizard, they'd never use just one. You need both to get the complete picture. And listen, your framework has to fit you. You gotta ask yourself, who are you as a trader? Are you the kind of person who wants to be in and out in a day? That's day trading. Or do you prefer to hold for a few weeks to catch a bigger move? That's swing trading. Or maybe you want to ride a major trend for months. Look, there's no right or wrong answer here. The best style is the one that actually fits your life and your personality. But no matter which style you pick, this part is totally non-negotiable. Your system has to have rock-solid, crystal-clear, objective rules for when you get in and when you get out. And these rules have to be set before you ever put a single dollar on the line. And why is that so important? Because when your money's at risk, your emotions are going to go crazy. Rules are what save you from yourself. Which brings us to our third and final pillar. And honestly, this one could be the most important of all for long-term survival. It's all about management. It's about risk, because a professional trader knows their number one job isn't making money. It's protecting the money they already have, always. And the number one tool for protecting that capital is the stop loss. Seriously, think of it just like this. It is your financial seatbelt. You wouldn't drive a car without one, right? So why in the world would you place a trade without one? It's a preset decision that gets you out automatically if a trade goes wrong, and it stops a small mistake from turning into an absolute catastrophe. Okay, so how do we use that stop loss smartly? Through something called position sizing. The golden rule, the one that keeps you in the game forever, is to never risk more than 1 or 2% of your entire account on any single trade. You just follow these 4 steps and you can size your position perfectly every time. If you do this, you could be wrong 10 times in a row and still be in the fight. That's how powerful this is. And one last rule of management, you only pull the trigger on trades where the potential upside is way bigger than the potential downside. It's simple, really. If you're risking, say, $1 per share with your stop loss, you need to see a clear, realistic path to making at least $2 or even $3. This is the simple math that ensures your winners more than pay for all your small losers over the long run. So let's bring this all home. As you can see, becoming a market wizard, it's not about finding some magic button or a secret indicator. It's about building a real, professional operation founded on 3 unshakable pillars. And here it is, the blueprint in a nutshell. Number 1, master your mindset. Trade with discipline, not with emotion. Number 2, build your framework. Have a system for what you do. And number 3, relentlessly manage your risk. Protect your capital like it's your job, because it is. You've got to have all 3. They support each other. You take one away and the whole thing comes crashing down. This is the path. So I'll leave you with one final thought. One question to really think about. When a trade goes wrong, is your biggest risk really the market, or is it you? Because as Mark Minervini makes crystal clear, the journey to conquering the market, it always starts with conquering yourself.